Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 44th Commitments of Traders report in 2013. It's been some time since we had our last review, but of course I guess everybody knows that there was a US shutdown, and so CFTC was not publishing the COT report. But we're back, so let's get started and have a look at commercials positions. Here we go. S&P 400 is on top of our list. There was a 36% change in commercials positions over there, a 43% change in small speculators. You can see the changes over here, pretty large changes if you look at this 1 year chart. If we open a 5 year chart, we're going to see the extreme on a wider scale. You can see that we were not actually for quite some time. We were very close to all-time extreme levels in the past, I would say almost a year now, but prices didn't really react. They're still in rally mode at the moment. Moving on to soybean meal, we have a 31% change in commercials positions, a 36% change in large speculators. You can see the changes over there, much larger than average. Again, it is a bullish signal, and we're expecting prices to continue their rise. If we open a 5 year chart, we're going to have a look at the extreme, whether that's pointing in the same direction. Of course, we're not at an all-time extreme on this 5 year chart. It's pretty visible that back over here in the end of 2011, we had a beautiful all-time extreme in soybean meal that basically put an end to this decline, and the rally started. Large speculators are above the zero line, so the trend is definitely pointing upwards. And if we look at this past few month or even year, you can see that whenever we had a relative extreme, that usually coincided with a top or a bottom. I'm just showing you bottoms, of course, because we may expect this point to be a signal. There's definitely, technically speaking, a pretty important support level not far. But let's move on and have a look at natural gas. We have a 26% change in commercials positions, 28% change in large speculators. Here we go. And you can see the change over here being definitely much larger than average. We can't even see similarly large changes, maybe in the opposite direction, but we have one maybe over here, actually a good one. Prices reacted for a week or two. Let's have a look at a 5 year chart and see whether we've got an extreme in natural gas. Here we go. You can't really see any on this chart. Even if we open a 10 years chart, let's have a look at the 10 year chart, whether we've got an extreme. Here we go. You can see that we're a little bit far from great extreme levels in natural gas. So let's move on and have a look at large speculator COT extreme. Here we go. Cocoa, heating oil, coffee, NASDAQ, all-time extremes. Let's open cocoa first because it's the first on our list. And you can see that in cocoa, we also have an all-time extreme in commercials position. So let's open the 5 year chart. Here we go. You can see there's definitely a widening in the COT charts, pointing downward. So this is a definite bearish signal. As you can see, I'm showing you some great examples in this past 5 years chart. You can see that whenever commercials were at very big short levels, that usually coincided with a top in cocoa. Okay, heating oil is our next market. All-time extreme over there in large speculators. There's no all-time in commercials. You can see large speculators underneath the zero line in net short territories. But let's have a look at the 5 year chart, whether this is a bullish or a bearish signal. Here we go. No question, this is a definite bullish COT extreme. You can see that whenever large speculators were net short, that usually coincided with a great buying opportunity. So again, this is a very similar case. So we should be expecting prices to rally sooner or later. Coffee is our next market. All-time extremes, both in commercials and large speculators. Here we have the chart. Let's change to the 5 years time frame. Here we go. And you can see that actually for quite some time, for the last 1.5, almost 2 years, commercials were above the zero line. They were in net long territories. And still, we had a few all-time extremes, always greater and greater, but prices did not react. So the extreme is present in this market, but it's really difficult to tell when there would be the point of trend reversal. When would we see prices really start a decent rally? So NASDAQ, let's go and have a look at NASDAQ, our last market for this review. We have a huge extreme in NASDAQ, all-time extreme in large speculators, but a 559 report extreme in commercial. So there's definitely a huge extreme in NASDAQ. But as you can see, prices are skyrocketing. Again, difficult to tell whether this will be the top just because we have an all-time extreme. You can see a few examples back in the past. We had these large extremes. I'm not saying prices did not react. This is a very good example that prices do react to these large COT extremes. It's just difficult to tell whether this would be a big trend changer signal, and would we see prices start a big decline. But anyhow, the stress is there, and anybody seeking a trading opportunity and may want to take a good risk-reward trade may actually consider a short opportunity in NASDAQ. Okay, I think that's going to be all for this week. But anybody who would like to have a look at other COT charts can do so at our COT charts page. If you would like to have a more in-depth and detailed COT analysis, well, here you go. You have our COT analysis page here, and there are a lot of other great functions that you can add to your table. The long-term trend, volume open interest scores, the COT index. You can look at market complexes, new COT report types, data types, all sorts of very interesting functions. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.